The banks realized that customer experience matters, which took them a long time to realize. They only realized it by applying a bit of external pressure, essentially digital banks. For example, Trust Bank does a fantastic job in Singapore to personalize loyalty programs, reward journeys, also products. But banks at its core interested in making money and not having happy clients. Regulation is needed and regulation is good, but the implementation in the banks is very bad. They very often go way beyond the original purpose of the regulator because they want to be super safe and not to make a mistake, and then it ends up with a very bad user experience. Clients are willing to share, but they also want to be in control of their data. If you ask our engine, can I afford a trip to Japan, then it first takes all the information on your transactions. It also goes to external agents and looks what is the cost of a flight to Japan, which hotels can I afford, and it gives you a relevant advice. I think there's so much power in that, but we're not there yet.
Welcome to the Pulse Check podcast. I have with me Martin Frick. We know each other since a long time.
True.
So great to have you on board for this. Actually, you're running your own podcast, so next time I maybe join yours.
Yeah, please, you're welcome to join.
Exactly, because I'm here in Singapore and I was really happy that you were able to make it to come here such in a short notice. So great to have you on board. And I think I mentioned to you previously that I typically start with an icebreaker. So tell me something about you. What makes you, Martin?
Well, I was always all my life a passionate footballer. And I ended up with being the president of a professional football club now in Switzerland. That's something I would never have anticipated. That's maybe a fact not many people know about myself. And being an ambitious footballer made me, to a degree, competitive. So I think there is always this thing of competitiveness in me that drives me every day to do too many things, usually, in one day.
Yeah, it's great because I remember that when I was still based in Singapore, we were at the Swiss Football Club on Monday evenings, I believe.
Correct.
Together. That's how I really got to know you, while we also had, of course, a business relationship. Which brings me maybe also to your story, which is a fascinating one. So you started really in big corporates, in banking tech, but then also moved to big techs like Avaloq, Temenos, actually two competitors, which is also a fascinating story, while landing then really in fintech, Moneythor, where you're now the CEO. Maybe you can quickly share your journey and also why you took some of the decisions from big corporates, big techs, or small, big, medium tech to fintech.
Yeah, try to keep it short. You know, I'm 36 years in business, so I think I could waste the whole podcast on it. But maybe I'm a bit of an odd child because I never saw a university from the inside. So I'm kind of a failed college student, and then I didn't know what to do. And I ended up in software development, didn't know much about it, but they were looking for developers. That was not a very high entry barrier. Back in the days. So I started out as a software developer, made a typical software developer career, ended up with 250 people in UBS looking after all solutions after the trade. And then I felt a bit stuck, you know, like a golden cage, because you know me, I'm a direct person, I like to do things, and maybe a big corporate is not the right place for that. And I then took a very kind of dramatic decision to forego a 6-digit part of my salary, move to Asia and start again as a project manager in Avaloq. I think that's also where we got to know us. I became the head of delivery, became the managing director, then did this very successfully, then went to Temenos, did this very successfully. And then I think I had a little bit enough of corporate world. And because in a corporate world, also a lot of value gets destroyed by quarterly targets, etc. And got then, through my experiences and networks, into the fintech world. I did a company called Metaco first, which is in the digital asset custody space, which then was sold to Ripple. So I built the Asia business for them. And then I ended up as the CEO of Moneythor, which is interesting because it brings me a bit closer to the consumer. And I was always, all my career, I was a bit puzzled how banks treat their consumers, because of course, like everyone else, I'm one of them too.
And you didn't mention the short stint at Synpulse. You actually were
Oh,
senior
yes, I
advisor
was an advisor in Synpulse. I'm sorry. Sorry to have not mentioned that. How
No,
bad?
it's
an interesting one because Synpulse 8, as it's also the brand we use for this podcast, it was also a new experience for us to go into product and solutions engineering, where we were mostly in consulting beforehand. And you helped us specifically with all your experience and knowledge to be more focused. And we did
Correct.
too many different things, and you helped us to say, hey, focus on one thing and not many, which I think was really the right decision. So thank you also for that, of course. Now into probably the topic of today, or a topic that is in the news all the time, hyper-personalization, that of course you address with Moneythor, and you have a lot of experience in. It's actually right on time, where we also released a recent paper. Actually, the first paper we worked on were together with Moneythor.
Correct.
I think about a year ago, maybe.
Yes.
So a good piece of work. And now recently we collaborated Synpulse together with Quinlan and Associates, Ben, good friend of mine in Hong Kong, strategy consulting, also very experienced. We looked at hyper-personalization again, and the report is online. I can put it, of course, in the comments. But I would love to start with a few findings we had, and I would love to hear from you your thoughts. So first of all, we looked into the full life cycle of consideration in retail banking to engagement, uptake, loyalty, right? So how to onboard clients and what the experience is when you look at really hyper-personalization, then all the way along the value chain. And I would love to share just a few numbers to beef up the conversation. So first of all, in terms of consideration, so there is 63 asked retail clients that say with greater likelihood they would open an account with a bank that provides personalized offers. There are 36% in terms of engagement that say there's better odds of engaging with a bank that provides more personalized product and service offering. There is 94%, so really high number, of higher chances for purchasing a more personalized product and service offering. And last but not least, in terms of loyalty, 69% improvement in likelihood of keeping an account with a bank that offers personalized services. Quick side note also on myself, when it comes to my retail banking relationships, I hate it the most if I get called up and, you need a loan, and you immediately realize, first of all, they speak the wrong language, right? My fault that I live in Hong Kong, where, of course, Cantonese is the base language, but still you could find out that I probably speak better English than Cantonese. And the second thing, offer something that I don't even look for right now. So not a good experience. So hearing all these stats, maybe to the expert in the room, what's your view on where we stand today?
Maybe this experience is not unique to banking. You know, I very often get offers for offshore developers for my football club. So I think there are also other industries that struggle with targeted marketing. But I think your report, which I flicked through this morning, is really very accurate. And I see this in everyday life, you know, that the banks realized that customer experience matters. Which took them a long time to realize, and I think they only realized it by applying a bit of external pressure. External pressure is essentially digital banks. Mm-hmm. For example, Trust Bank does a fantastic job in Singapore to personalize loyalty programs, reward journeys, also products. And many banks have realized now that they need to do something. Mm-hmm. But banks, in the end, they're at its core interested in making money and not having happy clients. That's as sad as it is. And so what many banks struggle, or that we engage with, is to translate the benefits into an internal business case. And I think it's our ambition of people like you to really show that there is also in the end financial value in what they're doing, because there's a very stringent journey from having a more engaged, active client to also have a client that spends more. And I think big consumer brands show this every day. And banks are still new to that concept. And very often when we engage with them, they like the idea, they see the benefits from a gut point, but in the end they need to compete for budget with other initiatives. And this is where it sometimes falls short, because they lack the expertise or how to express the value of such an engagement. And this is where we see it stop very often. If they get beyond that point, then of course banks have all sorts of issues around data, around red tape in compliance, etc., etc. And then even the banks that come to the point that they can hyper-personalize, let's say, the engagement, their product factory is still thinking in segments. So they think in segments. So they see Salomon is different than Martin, so we should offer him something else, but I have nothing to offer, because I only have a product that is for the segment of Swiss guys in tech, So I think they struggle then also with the individual offers. And this is where you can really differentiate. If you can also help to individualize offers like MasterCard did with the dynamic yield, where depending on your real behavior as Salomon or Martin, you get a different yield proposal for your MasterCard. And I think that's great. And they had a sensational uptick in loans they could dish out to clients. So I think there is a real value to it, but there's so many things that need to be addressed. I think it would also fill a podcast.
Yeah, and only because I'm probably more a retail client and they only offer loans to me, and of course a high net worth individual like yourself, just kidding, should get other product access. But that's actually also something I see in real. If someone comes and has the money to buy a Ferrari, no one will stop him from buying a Ferrari. But if you don't really immediately look like you're an ultra high net worth individual, you struggle to get certain wealth products, right? Even though you could probably afford the fees and fulfill all the regulatory risks, compliance elements. You mentioned the red tape in compliance, which also brings me a bit to the point of course, we are working in a highly regulated market in financial technology, banking, and insurance. Which makes it much more difficult when it comes to data. I mean, in general, data, of course, with GDPR compliance in Europe and others, is already not easy. And in, of course, the regulated environment of banking, even more so. That's quite often an excuse of banks to say, I cannot deal with the data because of the regulations, even though, and that's also in the statistics, we've seen the reports that clients are actually open to share data if they also see the value, right?
Correct.
So maybe you can also share on that note how this pans out in terms of the highly regulated environment.
Yeah, I think my first statement is, I think generally speaking, regulation is needed and regulation is good, but the implementation in the banks is very bad very often, because they very often go to an extent, to a degree, which goes way beyond the original purpose of the regulator, because they want to be super safe, not to make a mistake. And then it ends up with a very bad user experience. I recently wanted to transfer money for an investment, and I ended up, for whatever reason, on the potential fraud list of my retail bank. And then I had to call them. I had to talk to a fraud officer, and he led me through a big questionnaire and a horrible experience. Now I'm really one step closer to switching the bank again. And I think it's more the implementation of regulation. But as you said, clients are willing to share, but they want to, at the same time, what they often don't say, they also want to be in control of their data. And this means then I need to have some form of consent management in place. And what I see happening in the industry a lot is there are mechanisms now with electronic IDs, etc., to give consent. But what they still struggle with is what happens if I withdraw my consent. So for some reason, I don't want to share this data anymore. This is then usually a very manual process where you need to call people. You even need to write letters in some instances. And I think there is still a step to take that consumers feel comfortable to share the data, because they can also decide, oh, if I switch my relationship to another bank, I can withdraw the consent in a very easy and frictionless way. And I think this is also where we need to make progress as an industry to enable this journey.
Yeah, actually, we have a service offering at Synpulse in terms of data deletion. This is a big topic on how you can actually do this productively. I mean, one topic also, you mentioned fraud alerts, but also dynamic loan offers. I met a startup many years ago that addressed the issue, especially in emerging markets like Indonesia, where it's almost impossible for many to actually get small loans, business loans. And there was their technology, just don't remember the startup anymore, where you could basically give them full access to your Facebook accounts and so on to actually then strip data. It's almost like you really give them almost everything on your mobile phone. But with this, it's all your relationships to others in your network. It looked at some of the behavior and all these things. And with this, qualified you to some extent and gave access to loans to small, medium enterprise, but also personal loans where you probably in a normal banks would have never had a chance. But of course, you had to give a lot of data, a lot of knowledge about yourself, which again, if you really need, you're probably open to, while correct, of course, maybe later also being able to delete it then again. So what do you see in those areas, especially dynamic loan offers and so on?
Well, we are not so specialized on the loan side. I think what I see is, I think it's good to get third-party data that goes beyond banking to make credit decisions. I think that's essentially a good thing, because you maybe get some valuable information out of the network, It's not an easy one, because you cannot say if he has more Facebook friends, he's more trustworthy than someone else. So I think you still need to figure out what are relevant metrics, even if you include third-party data. But in the end, I think in essence, a bank transacts. And I think what banks are not making enough use of is all the information they have in the daily transaction data. They don't systematically analyze that. If they do systematically analyze that, in my view, they invested at the wrong end of it, because a lot of banks invested into big data models to calculate propensity for failing a credit, propensity for wanting a credit, etc. But the problem with that is, I know now Salomon is very likely to take a loan, but then because I have no way to expose this data in real time at the right moment in time, I still don't know when to place my offer. And I think the same goes with dynamic lending, because you need to have a bit of a more accurate and more up-to-date access to the transaction data, to what is really happening financially with the client. Because third-party data alone can be supplementary, but at the core of any loan is still financial data.
True. We all talk about, of course, now also AI nowadays, especially generative AI. And with this, of course, you have much more capabilities in, of course, processing a lot of data and trying to make the right predictions and leverage that. Maybe you can elaborate a bit what you see, maybe also even what you're doing with Moneythor, what certain capabilities there are, again, in maybe also comparison with some of the restrictions you have in the regulated environment, and also where you see it going.
Yeah, I think AI is already very beneficial to all of us in the let's say more cumbersome areas that used to be done by junior staff or interns. Let's look at research. It makes it easier to research stuff if you know where the source is of the data that pops up. I think it helps you with cumbersome administrative tasks, makes them more efficient. It gives you certain information about complex amounts of data that are difficult to filter out with classical if-when rule engine-based approaches. I think this is already almost a tick in the box, and a lot of people are applying that. To give you an example, in Moneythor internally, we over these 13 years we're in business, we amassed so much information and documents and then tried to find it, So we created something called Odin, because we stay with the Nordic gods, which is our internal AI chatbot, where I can enter any question and it finds me the right document or the right information. So these are applications that become pretty standard soon. Now, what I think has a great potential outside of the more internal stuff in banking is the conversational banking approach. When I was young, we went to branches. There was no internet banking. Then there came the revolution of the internet. And most people maybe don't remember, but this was not widely accepted by everyone on day one. They thought that's fancy, that's crazy, is this secure, etc. It became a commodity. Then mobile banking became a commodity. In some emerging markets, they jumped the internet banking. They went straight to mobile because they didn't have the infrastructure in the country. And I think the next thing that is slowly coming is conversational style banking, because the technology is good enough and we have use cases for that you can ask the same information you try to get from a restricted menu in a mobile banking. However good the app is, it's still restricted from a user journey perspective. You can just get by asking the engine, and you can then also edit. For example, if you ask our engine, can I afford the trip to Japan? Then it first takes all the information on your transactions, on your bank accounts, etc. Typical banking stuff. But then with this information, it also goes to external agents and looks what is the cost of a flight to Japan, which hotels can I afford, and it gives you a relevant advice. It says, hey, Salomon, if you cut down your subscription expenses for the next 3 months, you can afford a trip to Japan in this budget class. And I think there's so much power in that, but we're not there yet. And I think for 2 reasons. On one hand, the guardrails that you can put around an AI are not strong enough, because it's still hallucinating sometimes. Even our own one is sometimes popping up with answers where we have no explanation for. So I think these guardrails need to be stronger. And I think with all the fraud and scammers and phishing going on, I think it also, this whole conversational experience needs to be embedded in a very safe environment. And banks are at the very initial stages of using LLM really on the consumer side. Some banks have initiatives to use it internally. Yesterday on my podcast with Trust, they mentioned that they activated a LLM for their support desk. Yeah. And the support requests dropped by 75%. So but this is a kind of a semi-consumer usage, because it's not really around the banking experience itself. It's about the support experience. But I think there is still a way to go to make this relevant on the consumer side. But I'm absolutely convinced that the world is moving there, because it's just very convenient. You can enrich the banking experience by other things. And I think we will get there sooner or later.
It's a very interesting one, because, we talk now about retail banking mostly, but as we both have experience in private banking, wealth management, and you've worked for the 2 probably biggest tech vendors in that space. Of course, retail, it has to be low touch, because in retail, it's otherwise high cost to serve. In private banking wealth, it's high touch. It's much more personal, much more personalized if you talk about hyper-personalisation, but manually personalized. And we also see the development of such supported AI tools, for example, RM assistants. And there, if you don't give it directly to the client, if it's hallucinating, you still have the RM to judge. But as you are also in a regulated environment and you talk to the client, it actually already you need to record anyway to the regulator. So with this, you can actually, and some banks are working on this, some of the biggest private banks, that it, of course, listens and then immediately also shows information to the relationship manager of potentially correct investment ideas and so on. So maybe you can also share what your views is towards more wealth private banking when it comes to personalization?
I think, as you said, I think the classical private banking will always stay a hybrid thing. So I guess the use of these tools are more for the advisor, as you rightly pointed out, because the poor guys need to go through so much information, and it's the instrument universe is exploding. Since I started in 1989, and we had this instrument list, this master instrument list, which maybe had a few hundred titles, and it just exploded. And I think it's impossible for a human being to digest all this information, to have all the relevant data. So I think this is where AI is of great use to make relevant proposals to the advisor. Then he can filter himself through his I know the client filter, and then to make a very relevant proposal. So I see the use more internally, but you also have in the affluent space more, let's say, automated experiences. Stash away, whatever, and I think there you could maybe even use these models to also make relevant proposals to clients, what would be the right fit for them. And I think some businesses will disappear. When I was young, there were a lot of people making money with creating fact sheets and research data, and I don't think they have a future. My son did an internship in a wealth manager in Switzerland, and his job was to create the fact sheet for all the stocks they're recommending. And what does my son do being 21? He uses AI and generates it in a reasonable amount of time, which would have used months. And a lot of high-level expertise to be able to produce that a few years ago. So I think in summary, I see a great use internally to prepare the RM better for a client conversation, or to even do it real time in a client conversation. And I see a direct application to consumers more in the affluent space, where you have low touch models that are still relevant.
So coming then to maybe the last question of today, to really the future, let's say a few years from now, 2030, with really the fast changing environment with AI and so on. What is the next big thing where you feel that your clients, banks should focus on, and maybe also what you're focusing on with Moneythor?
Well, what we are focusing on is really the conversational banking. That's down our alley. Is it the next big thing? I think it is. As always with these things, difficult to predict timing, because it also all depends on how the underlying core technology, the LLMs, progress. And there are different opinions, how far we already are, whether we are in a dead end, whether it's evolving. There are different opinions. I'm not an expert. But I think just from a logical perspective and through my own 37 years of experience of the different stages, this makes sense, because it makes sense for the bank. They save a lot of cost on digital channels, and it makes sense for the consumer because the experience gets more flexible and better. So that's maybe in our alley. But actually, yesterday, Nick, the Chief Strategy Officer of Trust Bank, brought up a thought, which I shamelessly steal, and I gave you the source of this thought now. He said that he sees great potential in the conversions of AI and blockchain. Because with all these fraud issues you have, if you can put more information on blockchain, where you have a better traceability of the origins of requests and the origins of transactions and the origins of assets, and if you combine this then with AI, I think this could become very powerful. And I actually liked his thought a lot, and that's why I shamelessly stole it now, but I'm fair enough to give the source of this thought. It's not my own idea. But if you think this through, it really could help to also fight a little bit this ever-growing economy of fraud and scams a little bit. So I like that thought. I think this is something where two existing technologies can be combined in something meaningful. Because I sometimes get the impression that people are always after the next thing and then throw the money after the next thing before the thing before has even matured into real valuable business applications. And I think in this case, I think we could take two things that already exist and combine it in a more meaningful way than it is today.
Fully agree on this. And similar thought in direction of blockchain with, for example, KYC and source of wealth.
Absolutely.
If I could have all my KYC on blockchain, in my control where I can delete data if I want to, but it's certain data is validated by, let's say, UBS or whatever bank. I could then go to the next bank and say, I want to open a bank account. Here's my KYC or my blockchain. Here's my source of wealth. It could fast track immediately.
Absolutely, and you kill two birds with one stone. You have a better experience as a consumer because I'm going through this pain all the time with the KYC, and you also have more security on the bank side because you can easily assure that's not a scammer or something because it can all be verified with the blockchain. So that's the very practical example.
Yeah, really looking forward to that. I think we all would be happy with it. As we are right on time, maybe last question is just, where can people find you? More information about Moneythor and anything else you want to share? Well, you find us under the moneythor.com webpage. As you mentioned in the beginning, I have my own podcast series, so have a look. The podcast series is around deep banking. It's actually talking about how can you build deeper relationships with clients. Deep for us means it's personalized, it's proactive, and it's beyond banking. So a little bit more than just talking about transactions as a bank. And we are next door in Singapore. So please reach out on LinkedIn or whatever if you have any questions or you found anything interesting in this podcast. Cool. And we find you probably still sometimes on a football pitch or at least in the stadium. Yeah, you still find me this Saturday again playing against a British club. So as long as I can walk, I will play football. But unfortunately, I'm not sure yet how long I can still walk. But I will continue doing what fills me with passion. So all the best. Good luck in the game. And thank you for joining us today. Thank you to the audience. Of course, Pulse Check podcast, also online, YouTube. Please check in. And good luck then on the weekend. Yeah, thanks a lot for having me, Salomon. Thank you, Martin.